Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, we're very pleased you joined us for day 2 of our Battery and Precious Metals Conference. We'll start today with a live presentation from Blue Moon Metals. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Patrick McGrath. He's the Chief Executive Officer and Director of Blue Moon Metals, which trades on the OTCQB venture market under the symbol BMOOF and on the TSX under the symbol MOON. Welcome, Patrick.
Thank you, John. Thank you for having me. So welcome, everybody. I'd like to introduce you to Blue Moon Metals, as John mentioned. The flagship or namesake project for Blue Moon is the actual Blue Moon deposit located in the United States. Blue Moon is a VMS or polymetallic deposit, meaning multi-metal. And I think we are one of the most undervalued companies. I'm sure your audience hears that all the time, but we think we are one of the most undervalued as compared to our peer group. Trading at a roughly 1.5 million market cap at the time of recording. And I believe the main reason being is that the project is located in California, and the market looks at California. The perception is that it's tough to operate and permit there. And the purpose of this presentation is to show the reader or viewer that there's a real opportunity here. There's a lot of activity in California, and we're looking at our competitive advantages. So this slide is a legal disclaimer. I invite you to look at that in your own time. Investment highlights. So over the last number of years, we performed 3 drill programs on the property. This culminated in a recent update to our 43-101 mineral resource statement that was issued in late 2023. The highlights of that was a roughly 50% upgrade of the resource from an inferred to an indicated category, showing the confidence of the resource. In addition, we saw a 22% increase in the grade of zinc in the deposit and a 35% increase in contained metal. The recommendation of the 43-101 resource was to move to a preliminary economic assessment, and that's what the company is currently evaluating at present. So looking at the economics of the project. And just to be clear, just because we're moving into a resource and engineering does not mean we've capped the resource. We have a lot of upside. In the middle section of this presentation is our step-out hole that we did on hole 83 a couple of years ago, and the hole 83 is showing that we may have a whole new satellite deposit parallel to the existing Blue Moon deposit. And I'll show you here shortly some other exploration and expansion opportunities. So zinc and copper as the primary metals, base metals on the deposit. I don't think I need to educate everybody on the uses of zinc and copper, but obviously the green transition, electrification is going to be a powerful component to the demand of these 2 metals. We've seen the United States government put zinc and copper both on the critical metals list, and by all accounts, analysts everywhere are pointing to a gap between demand and supply of these 2 metals in the coming years. Not to be outdone is that the other metals in this deposit are precious metals. It's gold and silver. And I'll just move on to the next slide. This is the contained metal from our recently updated 43-101 resource report. And you can see zinc, copper, silver, and gold. In terms of the zinc, we're approaching 500 million pounds on indicated and roughly 500 million pounds on inferred. So a very large deposit of zinc, material amounts of copper, silver, and gold. You can see even on the silver, it's almost 5 million ounces unindicated, 6 million ounces inferred. In gold, 200,000 ounces indicated, 200,000 ounces inferred. So if you're looking at the contained metal and the value of that contained metal, it's almost 50-50. It really depends on the pricing of the commodities as they fluctuate, whether this is more of a base metal weighted deposit or precious metal. So it's great diversification. So in terms of the team, as mentioned, I'm the CEO of the company. I was a private shareholder of this entity for a period of time, and once I became the largest shareholder, I took over the company as the CEO because of the Blue Moon asset and its near-term potential. For the balance of my board, the officers, directors, and strategic advisors, We have a great team, a lot of banking, finance experience, as well as mining engineering and putting assets into production, including one of our strategic advisors who put a mine back in production in California. In terms of location, so the project, as I mentioned, is located in California. Just in the centerpiece here, you can see here's the coast, there's San Francisco. Then you move into the valley, which is the agricultural belt. And then you can see into here, this is Mariposa County. It's into rolling grasslands. So there's no agriculture in this area. This is simple cattle grazing area, big rainfall area. So it's an area that has active mines, more smaller scale mines. In terms of access to ports, you see the Oakland port is about a 2.5-hour drive, all on paved highways. Talking about service providers, you can get to Reno, Nevada in about a 4-hour drive. In terms of history, this is a colorful history of the project. In World War II, Hecla owned it and produced roughly 56,000 tons at around 12% zinc. It was really in the 80s and into the early 90s where well-respected operators such as Imperial, Boliden, and Barrick did extensive drilling on the property that culminated in metallurgy and a pre-feasibility study. The pre-feasibility study would have predated 43-101, but they brought it to that level and successfully permitted an 800-foot shaft, and with the idea that they were going to build a shaft, continue to drill the deposit off at depth, and ultimately go into production. If they would have proceeded with the permitted shaft, this deposit would have been mined out by now. So the opportunity is that they spent $25-30 million in Canadian in today's value on this project, and then it went to a former VP of one of these entities and lay dormant for almost 3 decades until we reignited it in 2018, 2019. So recent work by our company would have been updating the permitting. We obtained a drill permit. We did 3 drill programs, and then we did the updated 43-101 resource. Also along the way, we bought out the 2 royalty interests. There was a 5% NPI and a 2% NSR. We bought those 2 out at a very low valuation to make the property virtually royalty free. Also along the way in the last 2 years, as I mentioned earlier, is that zinc and copper are now both on the U.S. critical mineral list. And this is significant because this is a U.S.-based asset. And the U.S. government is looking to secure the domestic source. And here we are with a great resource rate in continental U.S. So in terms of tenure in the U.S. is excellent, as everybody knows. We have patented and unpatented grounds. And then in terms of local infrastructure, just a little highlight here on the map, you can see that we have power nearby, we have rail, we have paved highways almost to site, we have access to the port, and there's also communities, call it an hour away from site, that could house your workforce. This is a real competitive advantage for this project. In terms of recent drill results, I'll have 2 slides of drilling. I won't go through all of it in detail, but in 2021, hole 83 is the discovery hole. This is a new deposit near parallel to the Blue Moon deposit. Excellent potential to really increase the resource. In 2018, 2019, we had, this is more infill, looking at some high-grade intervals that we intersected, and really helped increase the confidence and the grade of the deposit in the 43-101 report. This is a long section. So up here it's near surface, this is where Hecla did its production during World War II. In the salmon color here in the red outline, this is the 43-101 resource. This is where the material of the drilling took place in the 80s, as well as we updated the drilling in the last few years. In terms of expansion opportunities, the holes ended mineralization at depth. We see that there's expansion on either side, and particularly this American Eagle zone. We have some really nice drilling intersects here that we think we can add to the resource. Over here to the left is the hole 83. That was the discovery hole or step-out hole that I mentioned earlier, where we had nice massive and semi-massive sulfide hit, and we think that's at the edge of a new parallel deposit. And this is an example of another VMS project in Canada. This is held by Agnico Eagle, the LaRonde deposit. And we're just showing this because it's roughly the same orientation as Blue Moon. You can see that they produced at certain levels and it just kept going at depth. And then they had multiple stacked deposits. So just really something that we're looking at as something in parallel. I mentioned there was metallurgy performed on the project. So this was done in the 80s. It was Lakefield, which is now SGS, showing that 95% recovery for zinc and 65-70% for gold. It's a simple process which adds value to the project. In terms of permitting, there's been several projects that are in production and gone into production recently in California. The key is it's the local county that decides on the mine permit, and we have several legacy rights associated with this project as a past producer. I think what's important to see is in blue on the top of this slide is that California is the second largest aggregate producer and the fourth most prolific producer by mineral products in the United States. So it's the perception there that California is not a big resource state, where in fact it is one of the top resource states, and this is not including all the oil and gas that's produced out of there. And here's examples. You can see Equinox has major gold production, and MP Materials is one of the largest rare earth metals in the United States. This slide here is the 4101 resource. It's the detailed description. I'll leave it to the reader to go through it. I already provided a summary of the upgrade and contained metal. And this is one of my favorite slides. So on the left-hand side is our average grade, and this has been bumped. We're now getting closer to 11%, so getting to the top third quartile of deposits in terms of zinc and VMS. But you can see on the right-hand side, in terms of valuation, we're the lowest valuation company. So I think there's a real disconnect between what we have and our peer group. And on the next slide, I just want to highlight what our competitive advantages are. So if you look at our project, and we're the very top line here, you can see that we have already existing highways going almost right to the project site. We have existing power, we have port, we have rail, local communities. Most of our peer groups do not have these advantages. They're in more remote areas or in areas where they need to build out all this infrastructure. So the capital costs for us associated with not having to do all these things is going to obviously improve our PEA results, and that's something that we're looking at introducing to the market. We do have another project. It's a high impact exploration project in northern Canada. It's something that we think in terms of value of where we're going to put our money. We're focusing on the Blue Moon project, but we're having this in the back end as it's another VMS project in northern Canada. So just highlight our share structure. We have a very, very small float. We have 26 million shares currently issued. Our officers and directors significant interest with roughly 13%. And on a fully diluted basis, it's around 30 million. We have 2 million warrants that are going to be expiring soon. So I really look at our fully diluted as more like 28 million. And as I mentioned, we're trading at a very low valuation, sub 10 cent. And the idea here is that as we're advancing these milestones and looking at PEAs and permitting advancements, we hope that valuation gap decreases tremendously. So with that, that's the end of my presentation. I'd like to open it up to questions. And just give me a moment. I'm just going to read some of the questions. So one of the questions is, what are the catalysts for revaluation in Blue Moon? I think one of the main issues is the permitting, and that's the biggest question we usually get. And in order to do that, that's where we think that there was a lot of expansion opportunities on the deposit, but we think that our capital is better served advancing the project towards permitting. And so that's where our resources are going to be targeting, and we think some of the milestones in the near term is obviously the PEA that we talked about. So we'll start pegging economic numbers to the project, as well as in the background, we're going to be continuing to work on our permitting options and what we can do to advance permitting, as we think as we move along the permit, that valuation gap should narrow significantly. So there's another question here. Can you speak to the permitting in California and what challenges do you see ahead and greenlight your project? So to quote mining entrepreneur Ross Beatty, who's the CEO or chairman, I believe, of Equinox, the two projects in California, he always says, is it easy to permit in California? And the answer is no, but it's not easy to permit anywhere in the world anymore. It's almost an even playing field, no matter what jurisdiction you're in. So in California, two main operating permits. I mean, there's ancillary permits, but the two main operating ones is your mine permit, which would be the local county. That would be the local county would be the decision maker, and then your reclamation plan, which is the state of California. So those are the two key projects. We have some legacy rights in terms of some rights that we had as an existing producer back in World War II. There was the 1991 permit that was successfully issued and granted in terms of water rights and in terms of to build that shaft. So we have all that information that's available to us. So we do believe that we have one leg up, but it is still going to require some time. But there is a permitting process in place, and we've seen it other companies get through that process and successful. I think the other advantage to us is that we're going to be underground. So this is going to be an underground operation, low surface footprint, low water usage. Even our tailings is going to be a dry stack tailings. So we believe that we have some advantages over other operators. A question here: is there any deleterious elements in the concentrate? And as of right now, with the metallurgy that was performed and tested showed it's a simple process with no deleterious elements. So that leads us to a clean concentrate and easier process when getting through the environmental process. Another question: are there any royalties on the project? As I mentioned earlier, we actually took call it the downturn in the market to buy out the major royalties. So there was a 5% NPI, which we bought out completely. There was a 2% NSR, which we bought out completely. There's only one remaining royalty. It's a 0.5% royalty capped at $500,000. So because it's capped, when we look at a PEA, it's going to be virtually royalty free. Okay, I think there's one other question here. The exploration potential on the project. I think I touched on this a little bit. We believe the project, if you look at the project itself, it ends in mineralization in terms of that depth. Looking at the LaRonde example, we believe this deposit would just keep going. And that was, when you look at the 80s producer, the Boliden and the Westman, they were going to build a shaft and just keep drilling it off at depth, most likely to look at a 20-year mine life instead of a 10-year mine life. And that's something that we can still revisit, but we look at it as the better value of the money right now is going into the engineering and permitting to de-risk the asset and narrow that valuation gap that's there right now. Okay, I think that's it for questions. Unless I see any more here. I'd like to thank everyone for attending today's conference. On the slide here is my contact information. It's my phone number, my email. I'm available anytime. I'm happy to do a one-on-one discussion on the project, or you can email me any questions. We'd be happy to have you as a shareholder as we advance the company. And like I said, we have some milestones coming up in 2024. We own the asset 100%, and we're looking to add value in 2024. Thank you very much for attending.